Welcome, ladies and gentlemen, to Commodity TV, the new edition of our online interview series. We want to talk now, to a real uranium top shot. Scott Melby is here with us, and he's the CEO and chairman of Uranium Royalty Company and of Uranium Royalty Corporation. So I have to say that correct. And the company is the one and only royalty company in the uranium space, and I think the guys have done a fantastic job so far. So, Scott, good morning to America. How are you?
Well, good morning, Johan. It's always a pleasure to be with you. These are exciting times in the uranium space, and happy to update on uranium royalty.
Fantastic, Scott. Thank you very much for your valued time. As I know, you are always on the run and always fully in the uranium business. Uranium Royalty, we said it already, it's the one and only royalty company in the universe here. And it's really interesting because you have fantastic royalties on the one hand. On the other hand, you have also physical uranium. So before we come to the market update, which we want to do also. But first of all, how was the year so far for Uranium Royalty?
It's been really great. As you know, we launched the company and took it public in December of
Hmm.
2019, which you'll recall we were still coming out of that long, deep, dark bear market.
Hmm.
But it was a wonderful time to acquire sort of our inaugural portfolio of royalty assets, which now sits at 20 interests on 18 projects. But what's been great in 2024 is a number of those assets have now returned to production or starting up
Hmm.
production again, and so we're beginning to see the cash flows that we've expected from those. We've also seen a nice appreciation in our physical uranium ownership that again was a strategy early on until our portfolio started getting into a steady state cash flowing
Hmm.
mode. We really wanted to expose our early shareholders and investors in uranium off the bottom of the market, and we
Hmm.
certainly did that. Initially with the investment in Yellowcake PLC, but
Hmm.
then subsequently the pretty systematic purchases of uranium right off the bottom at 20, 30, 40, $50 a pound. So
Hmm.
it's exciting times in the broader industry, and it's nice to see things coming together for URC.
Hmm. Absolutely. So, how many pounds do you have today in the inventory? And of course, how many more will come? Because I think with the yellow cake agreement you have, there is more delivery to come, right?
Yeah, with the Yellowcake investment that we made during their IPO back in 2019, we held close to a 10% ownership share in Yellowcake PLC.
Hmm.
That gave us rights to purchase uranium through their arrangement that they have with Kazatomprom in
Hmm.
Kazakhstan. We've exercised some of those purchase rights. We have some additional rights that we can exercise, but we've really been purchasing off the open market all the way up in this price move. So as it sits today, we have 2.6 million pounds of inventory at Cameco's Ontario facility at a cost basis of around $56 a pound. So that represents quite a $230 million war chest, if you will. That the objective there is to one realize nice gains on the increase in the uranium price, but
Hmm.
also monetize that to purchase our main focus, which are royalty and streaming interests. So
Hmm.
it's really been a successful strategy. We have additional deliveries coming in over the course of this year, another 350,000 pounds
Wow.
thereabouts, at an average cost basis of in the high 70s. So we still believe that purchasing uranium at these levels makes sense. We just see a supply squeeze that is
Hmm.
not going to be filled quite quickly. I mean, we have the vision to visibility to a number of mines that are restarting in the United States, in Australia, in Africa, but we need a lot more coming online between now and 2030. And I think the market has a long ways to run here until we
Hmm.
get to that point where the production gap is closed. And I
Hmm.
also think that by the time we get that additional production, we're seeing now the demand side increasing as fast or faster than we're bringing on mines. So We don't necessarily have to go through a boom and bust cycle, which is common in commodities, where high prices brings on production, which causes overproduction, which causes prices to fall. We may actually just be playing catch up over the next 5, 6 years just to keep up with demand from nuclear power growth.
Mhm. Yeah, absolutely. Yeah, I think the average uranium mine these days is more like 20 years development, right?
Yeah,
With all the pyramids and stuff. So it's not like you push the button and next year you are online.
yeah, yeah,
Yeah.
exactly.
Definitely. So, what is your intention then with that? Let's call it war chest. I like the word of physical uranium because you are now approaching 3 million pounds then by the year end. So, is that more something that you say, okay, it is more like an investment, or do you think, maybe we can do long term contracts with that to make maybe more money? Because I'm pretty sure you see the price for uranium also moving maybe more towards the $150 than down to 50, right?
I agree. Yeah, definitely. Well, we really saw the physical uranium investment as a transitional strategy. Again, coming off of a
Hmm.
bear market in the uranium
Hmm.
industry, to now a point where we really want to turn that uranium to cash to invest in royalties and streams, and so that's the number one focus of our small team at URC is
Hmm.
to seek out additional royalties and streams that are already in existence that we can purchase in the secondary market, if you will. But probably 80% of what I'm involved in right now is as a capital provider to that next generation of mines. So I
Hmm.
just returned from Australia, where we were down there visiting with miners and developers in Perth and Adelaide to see, all right, what do you need to get into production? Is it 25, 50, 100 million to complete a uranium circuit or well field?
Hmm.
And we'll provide that financing in exchange for a royalty or stream. I
Hmm.
want to make a similar trip to Africa, which there's a lot of development from the north all the way down to the south that we want to really fully understand, and we really want to build out our portfolio to be a global exposure to the uranium market. I mean, there's obviously some markets that we might, from a geopolitical risk,
Hmm.
might avoid. But listen, there's a lot of new mine development that needs to occur in Canada, the United States, Africa, and Australia. So
Hmm.
that's the focus. Sell that uranium as needed to fund those purchases. In a way, it's kind of uranium. Uranium is a bit of a cash management strategy as well. We could have that just sitting in CDs earning 5%, or we would prefer to have that in the uranium market on this as the uranium price has appreciated. So it's been a much better place to park that cash until it's
Hmm.
invested in new royalties.
Hmm. Okay, before we go into your company in more detail, because you are talking now already about the market. So where do you see the market, let's say, until the end of this decade? I think that's a good foreseeable time frame of 6 years. Where do you see the market supply demand? Because it looks like this year again we have like 40 to 50 million dollar shortfall in the supply, but this is not diminishing, right?
Right.
So even as you said, some more new mines are developed, but it takes time. So, what is your observation as you are totally deep into those markets? How do you see it? And let's stay conservative, please, on
Yeah.
the hypothesis.
So you're right. I mean, we have a 50 million pound structural deficit just this year alone. I think between now and 2040, it's 1.3 billion pounds.
Hmm.
That's a lot of new mine production. And that's giving credit to the large mines in Saskatchewan or in Kazakhstan, giving them full credit for full licensed production capacity. So, that a structural deficit's not something new to our industry. We've always been consuming more than we've been producing. It's because we had such huge overhang of inventories and secondary supplies,
Hmm.
and that has been the case. But as you know, with the production discipline since really around 2016, 2017, and then the entrance of Sprott, Physical Uranium Trust, Yellowcake, and other speculators, it's really not only rebalanced the market, but it's now put the market into a true deficit where you notice the attention paid to every quarterly report that miners out there, whether it's Cameco or Kazatomprom, everyone's hanging on their actual production results to guidance. That's
Hmm.
because now all that mine production is needed. And equally important are the new mine developments. So if a company says they're going to be in production, later this year at such and such production level, the market needs those
Hmm.
pounds. So it is we are in I think a true supply squeeze going forward.
Hmm.
The contracting levels of utilities have picked up. It's been a little bit quieter this year. I think utilities have been watching the Russian uranium ban and the waiver process to see how that shakes out. But the heavy amount of contracting that we've seen last year, for example, has heavily committed a number of producers like Cameco and others. So it's getting harder for the utilities now to contract for long-term supplies of uranium until these new
Hmm.
mines get up in production. And so that may put more demand on the spot market, which pushes the long-term market. And we're in a wonderful spiral upwards in both the long-term and, and spot markets. We did see the spot price dip a bit. It ran so high so quickly to over $100 a pound, and then came back into the 80s, and we've been trading kind of in the low 80s. But it's not a that's not the peak. We're just kind of at a plateau here before we take the next leg up. And you threw out the $150 a pound mark. I mean, that's a reasonable price level to be reached within the next 12 months because as we've said, the new mine production is coming, but it's not coming quickly enough to close that gap. So
Hmm.
exciting times, and of course the Russian uranium ban passing and signed into law. The utilities and the Department of Energy are active trying to figure out the waiver process and whether much of those deliveries or very little of those deliveries get granted waivers in that process. We shouldn't lose sight of the fact that the Russians are out of this market completely in December 2027. And for our planning horizons, that's practically tomorrow. So
Yeah.
it gives us the confidence, for companies like UEC to move forward in Wyoming and
Hmm.
Texas with the restart activities there, and in the uranium conversion and enrichment businesses. It gives companies in that space confidence to make billion-dollar investments
Hmm.
that know that they won't have the Russians kind of pull the rug out from under them, 2 or 3 years down the line. So really encouraging market conditions and just the demand. Um, on Monday I was up in Kemmerer, Wyoming,
Hmm.
on the occasion of the groundbreaking for the TerraPower Natrium reactor. Bill Gates was there. As you know, this is his company that's building an advanced, small modular advanced reactor, the Natrium. That's the trend we're seeing now. Not only the big large reactors, which we've seen 70 of those large reactors come online around the world in the last 10 years, 60 more under construction. We're now beginning to see the first wave of the small modular advanced reactors. So yeah, the demand picture, I think we're going to need to bring on mines as quickly as we can just to keep up
Hmm.
with demand. And you get 2030 on, and the deficit is very significant. And then there is absolute room for some of these larger projects like Arrow with Next Gen and others. Some kind of fear that those kind of larger mines coming along. I don't. I mean, I think the market needs that kind of production by the end of the decade and more like it.
Yeah, definitely. And I think you said it already with those nuclear power plants which are now in the construction, but I think 93 are planned and 343 are in the longer term proposed, but nobody talks about the SMRs. I
Yeah,
mean, companies like Oklo, Sam Altman, we were talking about that before the interview. Those are all small modularity. Of course, they are small, but when you build 40 or 50, it's
yeah,
also a nice amount of uranium which is needed. And I think this is also the future for all those data centers which will be constructed. Bill Gates said he wants to do with Microsoft 300 data centers in the US. So, and each will get an SMR.
yeah.
So
It's not
this needs
surprising.
to be fueled, right?
Yeah, and it is being driven. You see Peter Thiel, Bill Gates,
Hmm.
Sam Altman, even Elon Musk talking about the increased electricity demands from just the AI and data center,
Mhm.
and not to mention, electric vehicles and just computerization and
Yeah.
electrification of society. But these guys are smart enough. They've done the math and figured out that we can't rely on renewables for
Mhm.
100% of our energy
Yeah.
needs when they only run 30% of the time.
Mhm.
So it's not surprising they're the ones that are really investing all in on small modular advanced
Mhm.
reactors. And
Mhm.
so, yeah, that will represent a big boost in uranium demand. We're seeing the beginnings of it between now and 2030, the first of a kind units being built. But after 2030, I think you see thousands of these built and really revolutionize the way we
Mhm.
generate and distribute electricity.
Yeah, absolutely. And maybe one word on nuclear waste, because I heard, especially, for example, with the company of Oklo, there's one company, but there's also a dual, what's it called, the dual liquid reactor out of
Yeah.
Germany, where they can use also used nuclear
Yeah.
fuel. That means you do not have finally a waste storage problem, right?
Yeah, I think, we in the United States in the Carter administration, we moved away from the reprocessing of uranium. And I think you'll see the US give serious consideration again for that. If it can, even if it just reduces the volume of
Mhm.
spent fuel through reprocessing, as you've described, we think it's a very positive development. It does offset some uranium demand in the process, but I think the broader benefits from reprocessing would certainly be
Mhm.
welcomed, in my opinion, by the
Yeah.
industry.
Yeah, absolutely. Now, I think renewable energies together with nuclear power, that's fantastic, isn't
Yeah,
it?
yeah,
That would be really the way to go. Um, okay, so if we come to your company back, because there was a real long thing now with the markets, but I love that. How does it look like, let's say, with revenues for this year? What is going on with the, let's say, the royalties which are already paying?
yeah. So we are seeing a number of our projects return to production, begin to cash
Mhm.
flow. The most notable are MacArthur River and Cigar Lake. MacArthur
Mhm.
River is a gross revenue royalty,
Mhm.
which we love, which is a top line royalty, and it's paid out in physical uranium. So last year we received about $1.2 million worth of uranium from the project. That
Mhm.
amount will go up as production goes up and obviously the price of uranium strengthens. Cigar Lake is also ramping up to full 18 million pound a year production. It's a
Mhm.
net profit interest royalty, which means it's a bottom line. And there is a kind of a complex formula that works through an expense bucket, if you will, before, as that bucket is drawn down to zero, then we
Mhm.
start to pay out at a pretty significant rate. It could be 5 to 6 million just from that royalty alone. And the more Cigar Lake produces, the higher it sells product for, the sooner, probably within 2 years, we'll start to cash flow under Cigar Lake. We
Mhm.
have Langer Heinrich in
Mhm.
Namibia, which has restarted. We have a fixed royalty. It's around a couple cents per pound for every
Mhm.
pound produced there. And then Peninsula Lance project in Wyoming
Mhm.
is in process of completing their central plant and getting into production either late this year or early next. So if you
Mhm.
take that and the other royalties in our portfolio, we get to about 10 million revenue cash flow by 2027, 20 million by 2030, and up to 50 million by 2033. So that's
Mhm.
a nice progression, from the existing royalties that doesn't, take into account the new royalties that we will invest in and or sale of uranium inventories. So
Mhm.
yeah, it's good to be in this mode. And just to give you an idea, we have a 2% gross revenue royalty on Rough Rider, which we acquired, on a project that at the time was owned by Rio Tinto. It's now in UEC's portfolio. Later this summer, they'll come out with a economic study outlining potential production rates, capital costs, lead times, milling options, all that. But that's a project that could produce 6, 7 million pounds a year, and we have close to a 2% gross revenue.
Mhm.
So 2% of the economic value of that mine, won't be coming anytime before 2030, but at that time, we'll throw off a lot of cash flow just from that one royalty alone. And remember, the royalty model, we don't have cash calls for the mine
Mhm.
development. It's all just pure revenue coming in. So yeah, we're excited about a number of the projects in the portfolio.
Super. So which one would be the next one, which would go in, then really in full production?
Would probably be Peninsula
Peninsula.
Lance. That'll be a million to 2 million pound a year producer in
Hmm.
Wyoming. I would expect first production will be early next year.
Okay, super. Um, what is then the matter further on with Yellow Cake, and also let's say what are you doing with CGN, with the Chinese company?
Yeah, so we have over time sold down our shareholding interest in Yellowcake,
Hmm.
choosing to really turn those equity holdings into physical uranium. So really, we've gone from a derivative of physical uranium ownership to actual physical uranium ownership. So we've divested of the Yellowcake shares at this point, but we still
Hmm.
retain the purchase rights for quantity from Kazatomprom that we'll use at some point. Um, so, and the second part of your question was
Yeah, and how is it going with CGN? What are you doing
CGN.
with them?
So
Yeah,
yeah,
see,
we
with
have
the Chinese company.
an offtake agreement with them. We have a delivery coming from them at the beginning of next month,
Hmm.
and we just love to have that exposure. CGN being the largest constructor and will be the largest operator of nuclear power plants with the growth trajectory they're on. But they're the operator of the Husab mine down in Namibia. So that was kind of a unique situation to lock in that offtake at the bottom of the market with prices in the $40
Hmm.
$47 per pound roughly
Hmm.
coming from CGN.
Okay, super. I want to come back shortly to those small modular reactors because, to my understanding, or also my feeling, is that this is not really yet in the market, right? Because this is all in the making, will come over the next 3 to 5 years. You
Yeah.
mentioned TerraPower with Bill Gates, for example. Rolls-Royce is also a company, Westinghouse, NewScale. So how fast do you think, and to what size could this impact the uranium demand? What is your feeling? I know it's maybe too early to say, but I'm pretty sure you have a opinion about it.
Yeah, so we are in the kind of first of a kind construction demonstration phase, if you will. Between now and 2030, we'll
Hmm.
see TerraPower in Wyoming, X Energy building at Dow Chemicals petrochemical facility in South Texas. You have GE Hitachi up in Ontario, Canada, NewScale in Romania,
Hmm.
and Rolls Royce, obviously, and perhaps others building in the UK. So a lot of these are part of demonstration projects with the U.S. government, with the Department of Energy, with the Canadian
Hmm.
government, the U.K. government. So there's a cost sharing component to that. So it's really important to get these built and online and built on budget between now and 2030. But then the real growth comes 2030 on, where the CEOs of these companies indicate they have orders for thousands of these in everything from again, like petrochemical facilities, mining, where you need electricity and process heat, desalination of water, hydrogen production, and of course the data centers. So the supply and demand projections that you see from the World Nuclear Association or
Hmm.
UxC Consulting, it's largely kind of based on, to date has been based on the large reactors. But, from 2030 on, this
Hmm.
will be, and if that was the end of the story, the uranium fundamentals would be amazing. But I think the SMRs will just be gravy on top of that. And while a 100 megawatt reactor doesn't use as much uranium as a 1600 megawatt
Hmm.
reactor, you build enough of them. I think the indications by the utility executives in the United States is that they would likely add 90, almost 100 gigawatts from new SMRs in the United States in the coming 20 years. That's
Wow.
300 SMRs. So it may be easier. It's less of a capital lift. You know, faster payback period on these, and
Mhm,
they're scalable, so you can build, a series of 6 units in a series, and you have the first couple units producing and cash flowing as the remaining units are completed. So I
mhm,
think it's going to be attractive option for U.S. utilities. But now with the data center demand, we're actually hearing big utilities talking about additional large construction like the Vogel
mhm,
units, which came online in Georgia earlier
mhm.
this year. So yeah, it's an incredible growth story
Mhm.
for nuclear and uranium.
How many pounds of uranium does, let's say, a normal SMR use per year?
Yeah, and every reactor has a different fuel cycle. So if you wanted to use a rule of thumb, if a 1,600 megawatt large reactor uses 800,000 to 1 million pounds every 18 months,
Mhm,
you could proportionately determine on a 50, 100, 200 megawatt reactor would be proportionately less.
mhm,
But again, some of the early fuel loads, use higher enrichments, or there's a kind of a balloon impact on demand as the initial
mhm,
cores, are built and loaded for some of these reactors. And of course, HALEU, high assay low enriched uranium, for some of those designs, that's a higher octane, close to 20% enrichment fuel load. So that uses more uranium as well.
mhm. So I would say the future looks bright.
Absolutely. Yeah, and as a capital
Definitely.
provider,
Yeah.
Uranium Royalty is just positioned
Mhm,
so well, launching when we did, which was early in the cycle, but now being fully up and running, and to look at the breadth of the kind of projects we're involved in right now. I mean, we're looking at byproduct mines where uranium is not the primary commodity, but we can finance uranium circuits alongside
mm,
nickel, copper, gold production. That's attractive.
mhm,
But again, opportunities in all those major markets, and we want to be. Listen, we want to have royalty interests on every mine in every producing region in the world if we can. And
mhm.
but we're still still a young company, and we're embarked on that journey. But it's been a really exciting one so far.
Fantastic. Last but not least, we should talk about money for sure. So, how does it look like? What is cash in the bank? And because when I look at your presentation, it looks to me like you have something like 450 million Canadian dollars market cap, but you have well over 300 what 350 dollars altogether
Yeah,
in liquid assets. So
yeah,
I mean,
that's not lost on.
you are cash rich. It makes no sense to me.
You can acquire shares in Uranium Royalty at just the value of the uranium almost, and get
Yeah.
the royalties for free. So yeah, we don't like to be trading at zero point 0.5
Mhm,
p to NAV, but with the pullback in uranium equities recently, a number of companies are really trading below their value. We're a real clear example of that. So yeah, I mean that cash will be plowed into accretive acquisitions in the coming years. But we're really an attractive acquisition point at,
mhm,
again, zero point 0.5 p to NAV. For a
mhm,
royalty company, we should be and have traded at a premium to NAV, and
mhm.
that's where we intend to get back to.
Yeah, definitely. I mean, I've also much higher price target for you. I'm also seeing that the next thing could be more close to $5, $6, and longer term, I see it also more like 8, 9 Canadian dollars in my point and figure chart. So I think you are a pretty safe investment.
Yeah, absolutely.
Super. So the question of the question: when does it restart with the uranium price to go up?
Yeah, I think we've gone through this sort of plateauing of the price here. I would say the bull is resting. He's ready for the next leg up. But as the Russian uranium ban situation is now
Mhm,
sorted out, I think you see utilities return to uranium contracting mode. They've been really focused on conversion and enrichment, which is
mhm,
also very tight. So I would say over the second half of this year, we're moving back towards and perhaps beyond $100 a pound again. So
Mhm,
take this pullback in the uranium price and the uranium equities as a wonderful opportunity to add to
mhm.
positions. But yeah, the fundamental thesis is never looked better. And in my 40 years
Yeah.
of involvement in the uranium industry, so look forward to happy uranium investors in the coming months.
Absolutely. Perfect. That was a great final sentence. Thank you very much, Scott, for your time and half an hour. That's a long. But yeah, super. All looks good. Thanks a
Great.
lot and wish you all the best. And I'm pretty sure we will soon get an update then.
Thanks, Johan. Take care.
Thank you. Yeah, you too. Yeah, ladies and gentlemen, that was Scott Melby, the CEO of Uranium Royalty. And yeah, you heard it. Things look fantastic. It was never better in those uranium markets. The markets are in a structural deficit, they are in a supply deficit, and they will stay in it because, on the one hand, demand is rising, rising, rising. And the new mines, well, there are coming some online, but this will take years from here. And until we wait until those mines come online, yeah, the market moves further because many, many more nuclear power plants are being built, and the SMRs are not yet really into the calculation. So really check out uranium royalty because you are paying like, yeah, probably 20 cents for the real dollar you are getting because 70-80% of that market cap is backed by cash and physical uranium. And that is fantastic. You get the royalties almost for free. I'm a shareholder. I'm in. Check out the company. Thanks for watching us and bye bye from Switzerland.